Hello students, myself Professor R.S. Udpudi, BLDS College Jamkandi. In my previous video, I have discussed about the types of banks in India. Today I am discussing about Reserve Bank of India. It has been established on 1st April 1935 during British Raj. Under the Act Reserve Bank of India Act of 1935. Initially established in Calcutta, later permanently moved to Shahid Bhag Singh Marg, Mumbai, Maharashtra in 1937. It has been commenced with rupees 5 crore of share capital. Osborne Smith was the first governor of RBI. Sir Chintaman D. Deshmukh was the governor of RBI after independence. Presently, Shaktikant Das has taken charge as the 25th governor of RBI in the year 2018. RBI has been nationalized on 1st January 1949. Structure of RBI. It is governed by 20 Central Board of Directors. These 20 members includes one governor appointed by Government of India for the term of 5 years, 4 deputy governors appointed for the term of 4 years, and 15 directors. 4 regional local boards located in Mumbai, Kolkata, Chennai, and New Delhi. Local boards consist of 5 members each for the term of 4 years, appointed by the Government of India. Objectives of RBI: securing monetary stability and credit system, and to regulate the issuing of banknotes. It has a monopoly power of issuing the banknotes, stabilizing internal and external value of rupee, to develop organized money market, to proper arrangement of agricultural and industrial finance, proper management of public debts, to establish monetary relations with other countries, centralization of cash reserves of commercial banks, and to maintain balance between the demand and supply of currencies. With these mottos, RBI performs following functions. First function is issuing of banknotes. Next, it acts as a banker, agent, and advisor to the government. It is banker's bank. It is the lender of last resort. It acts as a clearing agent. It plays a developmental role. It is custodian of foreign exchange reserve, and it is the controller of credit created by the commercial banks. First function, issuing of the currencies, that is bank of note issue. Note issue should be like uniformity in monetary system, better control over money supply in the country. It should increase the public confidence. It should maintain monetary management. It should control over the credit creation. It should earn profits by issuing proper currency. And RBI has the monopoly power to issue the notes. RBI issues different denomination currencies except 1 rupee note. 2 rupee, 5, 10, 20, 50 rupees, 100, 200, 500 and 2000 notes are issued by RBI. It should maintain uniformity in issuing the currency notes, and it should earn the public confidence. It acts as a banker, agent, and advisor to the government. So we call it as a government's bank. It maintains accounts of the central as well as state government. It provides short-term and long-term loans and advances to the governments and collects checks and drafts deposited in the government account, provides foreign exchange reserves, collects taxes and other payments, issues new loans and advances on behalf of the central government and state government. It represents government in the international states such as IMF and World Bank. So it is called as banker, agent and advisor to the government. It is also called as banker's bank. It is a custodian of cash reserves, acts as a friend, philosopher, supervisor and guide to the commercial banks, provides a basis for the larger and more elastic credit structure and promotes national welfare. Provides financial accommodation to cooperative banking for financing special sectors like agriculture. It appoints key posts of commercial banks to ensure proper governance and sound banking practices. And it resorts to moral suasion in the public. RBI is the lender of last resort. It protects the interest of scheduled banks. It meets the genuine financial requirements of the scheduled banks. It builds up and strengthens the financial infrastructure. It increases elasticity and liquidity of whole credit structure. Also enables commercial bank to carry out on their activities even with limited cash reserves. It provides financial assistance to the registered or scheduled banks with RBI. So it is called as a lender of last resort. It acts as a clearing agent. Commercial banks can easily settle their claims with each other with the help of the RBI. It economizes the use of cash. It reduces the withdrawal of cash. It discloses of liquidity position of commercial banks. It acts as a it plays a developmental role, helps to develop money and capital markets, undertakes measures to promote economic development or growth, maintains price and exchange rate stability, promotes various institutions such as IDBI, NABARD, SIDBI, ECGS. All the banks established in India are under the control of RBI. IDBI, NABARD, Exim, SIDBI are the part or subsidiaries of RBI. To reduce the burden of RBI, those banks are established. Okay. Last function, it acts as a custodian of foreign exchange reserves. It overcomes balance of payment difficulties arises at the time of international trade. It formulates, monitors and implements exchange rate policy. It regulates the flow of credit, adopts credit control instruments such as bank rate policies, open market operation, cash reserve ratios, SLR from time to time. That means inflation control measures are taken by RBI with quantitative measures and qualitative measures. These are only some examples of controlling the credit. Creation of credit is the function of commercial bank. Controlling the credit created by commercial bank is one of the function of RBI. In other functions, RBI collects various types of statistics and it publishes, conducts surveys and seminars, publishes the reports, and it gives the training facility to working staff. These are the functions of RBI. Thank you for watching my video. Please subscribe, like and comment on my video. Thank you.